You are welcome to my channel. Today I would like us to begin a new topic, and we are going to look at bank reconciliation. Now, when we are in a business, remember I told you earlier on, when we are preparing the cash book, remember especially the 2-column cash book and the 3-column cash book. So in the amount section, there is always the cash and bank. Now, when we get to the bank column of the cash book, it has to be the same transactions there as the transactions in the bank. So we have two entities here. One, we have the business. Then we also have the bank. Now, what we prepare in the cash book, the business actually through its accountant prepares the cash book, and the bank prepares the bank statement. So at the end of the day, when all the debits in the cash book were actually credited in the bank, and all the credits in the bank were debited in the cash book, it means at the end of the day, these two balances should balance, and by the time we balance off, the last balance in the bank column of the cash book should be the same amount like the balance of the bank on the bank statement. But sometimes that's not so, because there are quite a number of factors that bring up that. We are going to look at those factors. So when we come to the business prepares the cash book and the bank prepares the bank statement. So let me say you do your reconciliations every because we can do it after a month. Some prefer doing it like after maybe 6 months, depending on the period you are free with and the kind of business you're operating. Now, if this is the cash book, so at the end of the month, you are going to request for a bank statement from the bank where you run a current account. Remember, the current account is where one is free to operate with a check. You might not go to the bank and queue up for you to get some amount of money, but you can write a check to someone to pick that amount of money. So that's how the current account works. Now, when it comes to this, now we have prepared our cash book and we have prepared our bank statement. So at the end of the day, when the balances are not the same, then it means through using the bank statement as a benchmark, we are going to adjust the cash book, and also the bank statement, we have an adjustment. You see? Then, after this adjustment, after we shall reconcile the two values. So, this is basically what we are going to look at. How do we reconcile? In case you are in an organization and you get a bank statement and it does not reconcile with the amount you have in the cash book, how do you treat it? So this is what we are going to look at today. Therefore, let's start like this. So imagine this is the bank column of our cash book. So we are going to say this is our cash book. Let me put here. Let's say this is our cash book. And this is how our bank statement looks like. So we have a bank statement. So in the bank statement, we shall have the date, we shall have the particulars, we shall have the debit, and we shall have the credit and the balances. Now, this is a disclaimer, and I know it brings about a lot of challenges. Now, when it comes to the bank, if we are receiving money, for example, if we have received a check, for us in our books, in the cash book, we are going to debit it because we are receiving the check. But then, the bank where you're taking that check, the bank is not going to debit your account. No. The bank will credit your account. I know it's causing some bit of challenge here, but remember, when you take the money to the bank, actually the bank is a custodian for your money. That money does not belong to the bank. Therefore, it's like a liability to the bank, because anytime that money will be taken away. You get? So that means when that happens, when you take your money to the bank, you are going to be credited. Therefore, a credit of the bank is a debit for us in the cash book. So that means our money increases in the bank by crediting, and as it is increasing in the cash book by debiting. Then, when the bank debits you, it means it's reducing on the amount of money that you have in the bank. So, when the bank debits you in the cash book, actually you credit. So, what you credit here must be debited in the bank, and what you debit in the cash book must be credited in the bank statement. I hope that's clear. Now, let me give you an example. We are starting, for example, on 1st January. So our balance brought forward is 1,000 here. This same amount of money should be this side as well, and we say 1st January balance brought forward, it is 1,000. So this is how we are beginning. Now, when we say like that, maybe for example, let me say we paid rent by check. So we paid rent by check worth 500. So you come here and say maybe on 2nd January, you see, then you show how this was to rent. Then the bank will debit you. Then we shall have our balance here as 500. Remember, it's when it comes to the balance section, it is accumulative. So it just increases. For example, when, for example, here, remember this was our balance. So since we are being debited here, it's going to reduce to 500. So if it was an increase and it was on the credit, it was going to increase this amount. So that's let us take that as an example. Then we might also have, let me say, we received a check from Jonah, and it's, let me say, on the 4th of January. We received a check from Jonah. Let me say, worth 500 as well. 500. So you come, there's 4th Jan, you see, 4th Jan, and there's Jonah here, and it's on the credit. Since we are receiving on the debit side of the cash book, when we come to the bank statement, it has to be on the credit side, and it's worth 500. So at the end of the day, our balance should be 1,000. Let me first end here. When you close off our cash book, you're going to find that the heavier side is this side. That means we shall take 1,500. Then, remember, our balance carried down will be 1,500 minus the 500, giving us 1,000. Then, our balance brought down should be 1,000. Now, this is how it should be. You can see that our balance here, our last balance here was 1,000, and actually our balance carried down is 1,000. So this is how it should be, because when you get the bank statement, you should be able to reconcile with what is in the cash book. But that's not the issue. That's not the issue. So there are certain factors that bring up the bank statement and the cash book not to have the same amount of figures or the same value. Let us see what those things are. Now, one, let me call them the factors for the differences in balances of bank statement and cash book. One, I would like to talk about the unpresented checks. Now, we are in business, and an individual comes and we write a check for them. Now, remember, when you write a check to that individual to go and pick money from the bank, for you as at that time, let me say you have written this check on the 20th of January. You see? So you have written this check on the 20th of January, and you go to your cash book and you credit it You go to your cash book and you credit it and as at this date. Now, this person you have given the check or to go and withdraw that amount of money from your bank account, he does not go there until maybe the 4th of February. Remember, when you're asking for your bank statement, you're going to have a specified period that you're going to ask for. Let me say, for the month of January. So when it is for the month of January, there will come the transaction that took place in the month of January. So that means this check was not presented within the period that you wanted it to be. That means it won't appear on the bank statement. But remember, you have it in your cash book. So if you have it in your cash book, and it's not in the bank statement, therefore you are supposed to come and reconcile. That means this one also is the cause of why the bank statement and the cash book balance do not balance. Because the unpresented checks, by that month, we have this. It has not yet been presented to the bank. For this amount of money has not yet been done what? Debited by the bank. You see? So that means this person did not pick this amount of money. Therefore, it leads to a difference in the bank statement balance and the cash book balance. Then, on the contrary, we also have uncredited checks. Now, when it comes to uncredited checks, remember I told you when you deposit money in the bank is supposed to credit you. So that means sometimes we might take checks to the bank. Remember, when we receive a check, we shall record it there and then in the cash book. So after recording to the cash book, then we shall take it to the bank. Now, a time by which you are doing your reconciliation, that check might not be credited by the bank yet to your account. That means that money is not on your account. So, as much as you have this amount of money in the cash book, it's recorded in the cash book, it is not yet there. It's not yet there on your bank account in that period. That means you are supposed to come and make changes here as well. So, those are some of the factors that we see. Then also, I would like to talk about bank charges. So sometimes when we deposit money in the bank, sometimes we might forget the bank charges. So the bank just removes that amount of money from you, from the amount that you have deposited. That means you still remain with a certain amount of money that you haven't paid. So the bank charges are automatically taken off the amount that you pay in the bank. So sometimes you might not cater for these bank charges in your cash book. So it means you're supposed to go back and update your cash book and update the bank charges as well. We have something they call standing orders. Now, what are standing orders? See, standing orders, remember, you can say to the bank, you can command the bank. This is an instruction to the bank from the account owner that every month be releasing this amount of money maybe for this payment. For example, you can say that you command this bank and you tell them every month release 10,000 to MTN for my airtime. So the bank will continuously do that every month. So this might not be the case in your cash book, because you might not even know whether they release the money or not, because they will not send you notification. So what you do when you ask for the bank statement, it will show that this standing order was actually cleared. It was actually sent. So when you do this, you update your cash book. Then I would like to talk about the errors. Of course, errors are human. And maybe as an accountant, you can make an error when you are entering the transactions in the cash book. For example, you can enter, for example, it's like this. We can have an amount of, let me say, 34,000. Then as an accountant, you might not enter this same amount. You can enter 43,000. So this is an error in the cash book, and so you're supposed to come back and correct this error. So that's the reason as to why we prepare the adjusted cash book, because in the adjusted cash book, that's where we are going to correct those errors. So we have close to, let me say 2 errors. There is an overcast and an undercast. For example, if you're supposed to record this amount of money and record this, that means you have actually recorded an overcast. So how do we correct an overcast? I'll show you when I'm showing the format of the. So you enter 34,000 instead of 43. Actually, you enter 43,000. Sorry. So you are supposed to enter how much? 34,000. So what you do, you find that difference. So this is how we're supposed to prepare this. Now, look at this. This is 43,000. Actually, our actual was supposed to be 34,000. So you find that difference. The difference is 9,000. Now, that 9,000, you come and prepare it when adjusted cash book on the opposite side where you recorded this. So you come and say 9,000. So when you prepare the 9,000 this side, it cancels out the other one. At the end of the day, your balance carried down will be 34,000. That means we have actually corrected this error. We have brought it back. We have credited the amount which we had debited and had increased. So it was an overcast. Now, another thing could be an undercast. An undercast could be, for example, I want to say I'm supposed to record 10,000. But, and this is on the debit side, but rather I record a 1,000 still on the debit side. That means this one here, if it is 10,000 and I'm supposed to record 1,000, there's a difference of 9,000. So you go to your adjusted cash book on the debit side and you say error, then you put the 9,000 to correct the other one. So at the end of the day, we shall have the balances balancing as well. So we have that as well. Then we can also have a wrong posting when it comes to the cash book. We can post wrongly. For example, we can have, no, this is the cash book and this is our bank. So when it comes to our bank, of course, our particulars here, we have our debit, credit, and balance. Now, when it comes to our bank, you find an item X is posted on the debit side. Let me say 1,000. And now, in the cash book, also, it is on the debit side, 1,000. It means we made a mistake here. Because what is supposed to be on the debit side in the cash book should be on the credit side. In the what? What is supposed to be in the on the debit side in the bank statement should be on the credit side in the cash book. Meaning, when it comes here, we are supposed to find the X this side. So, when we prepare our adjusted cash book, we shall get this X. You see, now because we posted it on the wrong side, okay, let me just do it like this. Our X still remains here as 1,000. Now we prepare our adjusted cash book like this: debit, credit. Now because it was supposed to go on the credit side, we come and place on the credit side. Then after placing it on the credit side, we shall say 2,000. Why do we make it 2,000? We are going to double this amount because it was placed wrongly on this on the same side. So now remember, this now becomes 2,000. You see, because this is a debit and this is a debit. So meaning, if the two are on the debit side, then it's going to become 2,000. So we come and cancel it out by saying that this 2,000, we double it and say it's 2,000. Remember, if it's an undercast, we add the value. If it's an overcast, we subtract. When it is on the same side, what we do actually, we double the figure, and it's the same amount of figure. Sometimes it can be on the same side, but still also it's an undercast. So what you do, you add the difference and also take it to the other side. So that's how the cash book is supposed to be prepared. I'm going to talk more about this when I come to the format of the adjusted cash book and the format of the bank statement. Ladies and gentlemen, we can also have things like a dishonored check. For example, you take your check to the bank and the bank refuses it. So it becomes a dishonored check. The bank was dishonored. So those are some of the things that will make the bank statement balance and the cash book balance not to balance. But we can do a reconciliation and have the balancing figure. Now, like I told you that the last balance on the bank statement should be the same balance like in the cash book. We are going to see the format of the bank statement and also the format of the cash book, adjusted cash book. So thank you so much for watching. This is Kevin Davis. It's a bye for now until we meet again. Don't forget to subscribe, recommend to your friends, and share.